I'm Melanie Peake with LePage, Parksville-Qualicum Beach Realty, and I'm here today with Dana Lynn, a mortgage consultant from 4Front Mortgages. Welcome, Dana.
Thank you, Melanie.
And today is Thursday, November 3rd, 2022, and we're going to talk about the interest rate increases.
Yes.
And what this means for buyers in our local market here in Parksville-Qualicum Beach.
Yeah, that's right.
So Dana, could you shed some light on our current interest rate increases and how that is affecting our mortgage rates?
Absolutely. Well, recently the Bank of Canada increased the rate by 0.5%, which makes prime now 5.95%. This will mean that if you have a variable rate mortgage, that you may potentially see an increase in your monthly payments. If you have a static payment, not so much, but you still have to keep an eye on your mortgage for static payments.
Right.
Yeah.
So anyone on a variable rate, they'd be connecting, if they have a current mortgage, they'd be connecting with their mortgage specialist to figure out what that means for them.
Correct.
And any potential buyers out there who are thinking of getting into the market, do you have any tips for buyers and the steps that they should take?
Of course.
To help them be successful in getting a mortgage in these days?
Of course. The new buyers may consider a variable rate mortgage to ride out the recent increases. We may see a few more. We're very hopeful that after December, perhaps there will be a pause on rate increases for some time, maybe even declining interest rates in 2023. So if you have the tolerance for a little bit of fluctuation in your monthly payments, that's great. Otherwise, if you really would like to have a fixed term to have the stability of payments, we like to recommend that it's, for now, a short-term fixed term.
Okay.
So 1 to 2 years to ride out the next little uncertain times, and then revisit, perhaps then you'll be looking at interest rates closer to 3 or 4%.
Right. And then if a buyer is on a variable rate versus a fixed rate, what does it mean in terms of buyers making changes to their contract?
Okay. Yeah, that's a good point. I guess what I would caution is it really depends on your situation. So obviously if you are losing sleep over your mortgage payments changing, absolutely consider fixing into a fixed rate. Right. If you can, keep it a short term. If you're sort of at the early stages of your mortgage and you've got like kind of a longer term ahead of you and you need to fix in for like four years, I would consider speaking to a mortgage specialist and ensuring that that's your best move. You have things to consider like, am I going to move?
To get out
what
of
if
it?
The interest rates decrease substantially and I'm overpaying my interest amount? So there's a lot to consider, but certainly if it makes you feel better, look at those fixed terms, but opt for shorter ones if possible.
Right, that makes sense. So what are the steps that a potential buyer should be taking who is considering getting a mortgage within the next year or so?
I would say the first step you want to do is get pre-qualified to determine your budget. That makes it easier when people are actually shopping. They know what they can afford.
Right, when they're out with their
realtors. Continue to save it for your down payment. Keep a healthy credit score. That means, constantly paying down debt, maybe like eliminating some of your debt from your budget right now. And then also ensuring that you have a rate hold in place, which usually lasts, depending on the lender, for 3 to 4 months.
Right. So if anyone had met with their mortgage specialist, say 4 months ago, it would be a good opportunity to reconnect with their specialist, see if it's changed since the recent.
Correct, because as we know, rate increases can change what you qualify for.
Okay. Well, that's all really great information.
Thank
you. So Dana, what's a great way for anyone to connect with you, to ask questions or get more information?
Yeah. Feel free to email me at dana@4frontmortgages.com or reach out to me directly on my social.
Okay, perfect. Well, thank you.
Thank you.
Thanks for watching.